Shares of Boeing registered a near 3% drop, leading to losses on the Dow after the U.S. Federal Aviation Administration's findings on the grounded 737 MAX showed a new risk that will have to be repaired before the aircraft can resume operations. Following the report, an official for Boeing reportedly said the plane maker now expects to complete the latest software update for the 737 MAX by September. World stocks edge higher on Monday as trade tensions between the US and China soften, lifting risk appetite. Asian equities were up more than 2%, while European shares posted a 2-month high and US futures signal a triple-digit increase at open. With Dow futures adding 256 points, the S&P 500 futures gaining 30 points, and the Nasdaq 100 futures climbing 126 points. Bitcoin briefly left the $10,000 level on Tuesday, recording its 4th straight day of losses, and ending 30% below this year's high of $13,929 booked 6 days earlier. The digital currency hit $9,766 overnight, which was still above $7,888, where a 2-week rally started on June 11, although it remains below record highs of nearly $20,000 hit on December 2017. European bond yields reached record lows on Wednesday after International Monetary Fund Managing Director Christine Lagarde was officially nominated to become the next president of the European Central Bank. Germany and France's 10-year yield dropped further following the announcement, while Belgium's bond yield stood on negative territory for the first time, suggesting that investors are prepared to pay to hold the debt until maturity. Asian stocks were up on Thursday following strong increases of U.S. shares as the country's weak economic figures reinforce hopes of rate reductions by the Federal Reserve as soon as this month. MSCI's broadest index of Asia-Pacific shares outside Japan climbed 0.4%, while Japan's Nikkei and Australia's S&P ASX 200 gained 0.3% and 0.6% respectively, after a report by a payroll processor showed the U.S. added fewer jobs in June, which further suggested a slowing labor market.